I'm gonna show you something beautiful. Now I'm free.
Assurance level for related services. Assurance services by CA firms is attestation services. CA issues a report about the reliability of an assertion that is made by another party. Primary purpose of 1. Assurance services. To improve the quality of information for the users to make a decision. 2. Non-assurance services. To generate recommendation, providing services to management in discharge their duties. Attestation services fall into 4 categories. 1. Audit of historical financial statements. 2. Effectiveness of internal controls. 3. Review of historical financial information. 4. Other attestation services that may be applied to a broad range of subject matter. Audit of historical financial statements is a form of attestation service in which the auditor issues a written report expressing an opinion about whether the financial statements are fairly statement according with FRS. Effectiveness of internal controls. Auditors also attest to the effectiveness of internal control. This evaluation provides forward-looking information, because effective internal control reduces likelihood of future misstatement in the financial statement. Review of historical financial information. Audit will provide high level of assurance, but review of historical financial information provides moderate level of assurance on the financial statement, less evidence to accumulate necessary to support the opinion. Other attestation services that may be applied to a broad range of subject matter. Basically natural extension of the audit of historical financial information, as users seek independent assurance about other types of information. For example, agreed upon procedures, compilation, and the examination of prospective financial information. 3 levels of assurance consists of audit, review, and compilation. The purpose of having an audit is to provide financial statement users with an opinion by the auditor on whether the financial statements are prepared in accordance with the proper financial reporting framework. An audit involves 1. Review and testing of internal controls, 2. Physical verification of certain, 3. Documentation and assets, 4. Direct confirmations with third parties, 5. Substantive verification of transactions and balances to evidence, 6. Review of documentation associated with various audit assertions. A review engagement is conducted to provide limited assurance that there are no material modifications that should be made to the financial statements for them to be in conformity with the financial reporting framework. The benefits of a review engagement include, 1. Provides an overall review of the financial statements and highlight areas for management's attention. 2. Delivers a cost-effective solution. 3. Quicker process than conventional audit. In a compilation engagement, the objective is to assist management in presenting financial information in the form of financial statements without undertaking to provide any assurance that there are no material modifications that should be made to the financial statements so they will conform to the acceptable financial reporting framework. A compilation involves 1. Gaining a general understanding of your business, accounting principles used and financial reporting system, and 2. Presenting financial information in the accepted format of proper financial statements.
Due diligence audit. Due diligence audit is a process of inquiry and investigation made on behalf of a prospective buyer on a possible business merger or acquisition. The scope of due diligence requires the chartered accountants to verify the state of affairs of the targeted business. It requires comprehensive review and inquiry. It is conducted in prudence and in accordance with generally accepted practices. The auditor is required to understand the client's need, to avoid wrong audit procedures being carried out. Therefore, letter of engagement is necessary for the audit client to agree on the scope of audit. Audit procedures for due diligence audit. In the most cases, due diligence audit will be similar to statutory audit procedures such as: review the working papers of previous auditors. Evaluate the valuation of the assets of the company. Review income statement to determine accuracy of profits. Verify all material items in the balance sheet. Review and report the management structure and corporate structure. Review litigation issues, contingent liabilities, commitments. Forensic auditing. Definition: an inquiry into the financial affairs of a business including the examination of its audited accounts for recent years and its current and estimated future position, as it will enable the investigating accountant to ascertain and marshal in his report the information relevant to the purpose of his inquiries and to give recommendations and conclusions based on this information. Often conducted to obtain or develop information as legal evidence or for use by expert witnesses in the court of law. Requires the use of critical analysis and investigative skills, integrated with accounting knowledge and business experience. Required to report to the company that has appointed him or her in the case of a regulatory body such as Bursa Malaysia or ministry or to the committee set up for that purpose. Required personnel who are trained in detecting, investigating and deterring fraud and white-collar crime. Example of fraud and white-collar crime: business or employee fraud, criminal investigations, shareholder and partnership dispute, business economic losses, purchase of shares in a private company or partnership. Stage of audit for forensic audit. Stage 1, instruction from client. Stage 2, communicate with the auditors. Stage 3, assessing the aims and probable scope of the investigations. Stage 4, obtaining background information. Stage 5, deciding the outline of the audit report. Stage 6, fact gathering. Stage 7, drafting the audit report. Stage 8, clearing the draft report with the company being investigated.